Hi guys, welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. Today we will talk about top 12 biggest hedge funds in the world. Hedge funds are measured in terms of assets under management, AUM. This term refers to the entire amount of money the fund has collected from investors. Funds with a higher AUM are more popular than funds with lower total investment dollars to work with, representing a sign of strength. After all, the stock market is a battle between the bears and the bulls, where cash is king and supply and demand is law. The more money these funds have to throw around, the more capable they are when it comes to swaying investor opinion and tipping the scales of supply and demand. Here's a list of the largest hedge fund managers in the United States. 1. BlackRock. BlackRock is a well-respected giant in the world of hedge funds, often talked about on the world's leading financial media and founded by moguls including Larry Fink, Susan Wagner, Robert S. Capillo, and others. The hedge fund firm has grown to become so large that its assets under management can't be measured in billions. It has about $9.5 trillion in assets on its books. The firm was originally founded as a risk management and fixed-income institutional asset management firm. But with massive success in financial markets, it grew to become the world's largest fund manager. While the company manages a long list of hedge funds, it also offers a wide range of index funds and passively managed investing portfolios for the general public, which has helped the firm amass such a high AUM. 2. AQR Capital Management. AQR Capital Management was founded by Cliff Asness, David Kabiller, John Liu, and Robert Krail, all of whom are highly regarded experts in financial markets. The firm has been around since 1998 and serves institutional investors, financial advisors, and high net worth individuals from its main offices in Greenwich, Connecticut. With more than $248.9 billion in assets under management, the firm may only be a couple decades old, but it has grown to epic proportions. Assets in the fund are invested in a variety of ways, including traditional securities and derivatives. Like several other hedge fund managers, the firm is known for taking a quantitative or systematic approach to investing, a process that requires detailed mathematics and data analytics. 3. Bridgewater Associates. Founded in 1975 by billionaire investor Ray Dalio, Bridgewater Associates has become a force to be reckoned with, amassing more than $150 billion in assets under management as of March 2021, according to the company's website. However, Dalio and his fund management firm aren't exactly what most retail investors imagine when they think about hedge funds, which have earned a relatively negative reputation among some in the investing community. Instead, Dalio and Bridgewater are celebrities of sorts, with Bridgewater once being named one of the 5 most important private companies in the United States by Fortune magazine and Dalio being nicknamed the Steve Jobs of investing by i-cio.com. Although Bridgewater does take part in short selling, once making $14 billion in a short selling frenzy on European stocks, it makes its decisions from a macro perspective. That means the firm makes its investments based on the state of global economies, rather than picking individual stocks. Dalio and his firm make bets on the market as a whole. Following investment strategies he created known as pure alpha and all-weather. According to Attic Capital, Bridgewater Associates generates about 11.5% annualized returns. 4. Renaissance Technologies. Founded by Howard L. Morgan and Jim Simons in 1982, Renaissance Technologies is a massive firm, managing more than $165 billion in client assets. The firm is located in Long Island, New York, and employs around 300 people, more than 150 of whom are tasked with investment advisory functions. According to Benzinga, the fund is one of the most successful in the world, pointing to the firm's Medallion Fund as one of the most profitable and closely guarded secrets on Wall Street today. As its name suggests, Renaissance Technologies, often abbreviated Rentech, focuses its efforts on building a technological advantage in the market through the use of complex mathematics and data science. While it's well known that math and data science form the technical approach the firm follows, there's not much known about the exact investment strategies it employs. After all, the Medallion Fund is invite-only and generally only available as an investment option to the company's employees. According to Institutional Investor, the firm's Medallion Fund generates annualized returns around 66%. 5. Elliott Asset Management. Elliott Asset Management, also known simply as Elliott Management, was founded in 1977 by Paul Singer and quickly became a leading management firm on Wall Street, controlling more than $48 billion in its portfolio. Singer is known as an activist investor who purchases large stakes in publicly traded companies that need a push in a new direction. Once they take a substantial stake, Singer and his fund use their large holdings to force the companies they've invested in to make moves following their vision of a better reality for investors. In fact, more than one-third of the fund manager's portfolio is invested in distressed securities, which represent companies or governments dealing with financial hardship. 6. Two Sigma Investments. Two Sigma Investments has about 20 years of experience providing services to institutional and high-net-worth investors. Although it's one of the newer hedge fund managers on the list, you can't discount its popularity, with more than $68.90 billion in assets under management. The firm was created by some of the brightest minds on Wall Street, including David Siegel, Mark Pickard, and John Overdeck, all of whom have extensive experience making successful moves in the market. The company is yet another that leans on technological innovation when it comes to developing and following trading strategies. In particular, Two Sigma is known for the use of artificial intelligence, machine learning, and distributed computing in its trading strategies, which has been a successful approach since the company's inception. This highly technological approach to investing seems to be paying off, with annualized returns of more than 30%. 7. Millennium Management. Millennium Management was founded in 1989 by investing mogul Israel Englander. Millennium has amassed a respectable $48.3 billion in assets under management. The investment management style at Millennium is that of the classic hedge fund, with a heavy focus on both fundamental and technical analysis at the center of several investment strategies, ranging from relatively low-risk fixed-income strategies to fast-paced quantitative and derivatives trades. This mix of strategies ensures that the higher-risk investments, like derivatives, are offset by low-risk investments in fixed-income securities. However, that balance also eats away at the profitability, which clocks in at around 10% annually, according to the Wall Street Journal. 8. D. Shaw & Co. Founded by David E. Shaw, D. E. Shaw is another Goliath hedge fund management firm. Founded in 1988, the New York City-based firm has amassed an investment portfolio worth around $55 billion, according to the company's website. The fund management company is best known for the development of complicated mathematical models and complex computer programs designed to locate and exploit anomalies in the stock market. The majority of the hedge fund's investments are made in derivatives, representing about $35 billion of its portfolio, with the remaining $20 billion in the portfolio being invested in long-oriented traditional investments like stocks, bonds, and exchange-traded funds. According to Institutional Investor, the fund management firm generates average annualized gains of around 10.8% for its investors. 9. Tiger Global Management. Founded in 2001 by billionaire investor Chase Coleman, Tiger Global Management is another relatively young hedge fund manager that has made a big name for itself on Wall Street. Today, the firm manages about $65 billion in investments for its customers. While the firm invests in a wide array of assets, including stocks, bonds, and derivatives, the vast majority of the moves it makes are in the technology space. Primarily, it focuses on software, internet, consumer technology, and financial technology investments. According to Value Walk, the firm's focus on technology and its strategy when investing in the sector have done well for its customers, delivering annualized returns of around 27%. 10. Davidson Kempner Capital Management. Founded in 1983 by Marvin H. Davidson, Davidson Kempner is a well-respected investment fund with a long history of success. Unlike most hedge funds, which take a technical approach to investing, Davidson Kempner's approach is strictly fundamental, with the investment decisions being highly event-driven. This means that the company looks for events that are likely to drive the price of assets up or down, and makes trades based on the likely movement as a result of the event. The strategy has worked out well for the firm over the years. Not only has it amassed a massive amount of assets to work with, currently more than $42 billion in AUM, it's known for generating compelling returns. 11. Citadel. If you're in the know on the social side of Wall Street, Citadel is likely one of the first names of big hedge fund managers you might think of. Founded in 1990 by Ken Griffin, Citadel has grown to become a behemoth with about $38 billion in assets under management as of October 2020, according to the company's website. The firm is best known as a short seller, betting against the success of certain assets, but that's not the only strategy the experts at Citadel employ when working in financial markets. It also has a strategy of forming long-term relationships with thousands of companies and institutions through its investments. According to Reuters, the firm generates annualized returns of more than 18% for investors who take part in it. 12. Lone Pine Capital. Lone Pine Capital was founded by Stephen Mandel in 1997. The fund manager focuses its efforts on traditional long and short investing, but it also offers various long-only funds. Like many other hedge fund managers, Lone Pine Capital is a private investment management firm that caters to institutions and uber-wealthy investors. Today, the fund management firm controls more than $27.5 billion, while keeping costs low with only about 50 employees. Before launching Lone Pine Capital, Stephen Mandel worked at Tiger Global Management, becoming one of more than 30 employees of Tiger to set out and start their own fund management company. What do you think of my video? Let me know in the comment section below. Thanks for watching my video.